So the Fed finally cut by 50 basis points. This is what I was leaning towards. As I said in my previous video, I wasn't 100% sure, but if I had to guess, they would cut by 50 basis points, and simply because of what Jerome Powell said at Jackson Hole, which is he's not looking for the labor market to soften any further. And that signaled to me that, you know, the Fed now, part of their dual mandate, one is controlling prices, two is controlling or maximum employment. So in my view, it was his position that a 50 basis point cut would try to avoid a recession due to high unemployment or rising unemployment. Now, what does this mean for the market? What's going to happen to the market? I first want to talk about just really simply why the Fed cannot cut extremely fast, okay? Because there's this thinking that the Fed, once they start cutting, they're going to bring rates to zero. I don't think that they're going to bring rates to zero. I think that was something that was tried after the great financial crisis, and I think that the market and the economy was addicted to cheap money. However, what happens when you have rates at zero is that you have no cushion in case something happens. You can't drop rates further. They're already at zero. And we, you know, are not in this country, hopefully, won't do what Japan did with negative rates and holding rates negative for decades, but they were dealing with a deflation problem, which we don't have in the US. So if you have your rates at zero, you can't go anywhere. You can't go any lower if there is an emergency. So I don't think that the Fed is going to look to bring rates to zero quickly. Plus, we still have inflation, right? Supposedly inflation is at 2.5%, which is higher than their target. That doesn't mean that prices are dropping. That means that prices are rising less sharply. So the Fed's goal is 2% inflation rate. If they drop rates too fast, then inflation is going to kick back up, and then they're going to have to raise rates again, which would completely, in my view, collapse the economy as well as the market. So they can't drop rates too quick. Now, what they're going to be keeping a keen eye on is employment numbers, right? They have to make sure that the employment does not rise sharply. Obviously, they're also going to keep an eye out on inflation to make sure that, did I say employment or unemployment? They're going to keep a keen eye on unemployment, making sure it doesn't rise sharply. And they're going to be keeping a keen eye on inflation, making sure that it doesn't go back up, right? Because any inkling of inflation going back up or any inkling of unemployment rising is going to put the Fed's job in a really, really tough spot. So this is why, you know, we tend to see recessions after a very aggressive hiking cycle. The Fed hiked 11 times in a row within a year and then held those rates there for over a year, right? And now we are starting to see the effects of what they did. It's going to be very hard, in my opinion, to control unemployment. I think that once unemployment starts ticking up, it's not like it just halts there, you know, for our convenience. It's going to be really hard to control unemployment. And I think that, you know, this is where potentially we're going to see some trouble. If unemployment continues to tick up, the Fed is going to have to cut more, but then if the Fed cuts more, then inflation is at risk of ticking up. So I personally think we are still going to go into a recession. Again, a recession doesn't mean a black swan. All right, sorry, I was driving earlier, had to get to my destination. But again, just a quick update. I will do a more detailed video later. But in terms of the market, as I said, I do think that we are going to hit all-time highs. Actually, as of the time of this recording today, which is the day after FOMC, the S&P did hit an all-time high. The NASDAQ is about 3.5 percentage points away. But I think both of them hit all-time highs. I do think they can continue to go up a little bit more until the next round of data. Like I said, I do think that the ultimate trouble comes in if unemployment looks like it's going to tick higher, or if inflation looks like it's going to tick higher. This is why this is such a tricky time, because the Fed only really has one tool in order to try to control unemployment and in order to try to control inflation. And, you know, raising it basically puts unemployment at risk, but decreasing it puts inflation at risk. So there is that is why we tend to get thrown into a recession during very aggressive rate hiking cycles. This is why I said that if you don't have the stomach for volatility, this is not the time to mess around, right? Like we're already at all-time highs. I know a lot of people were waiting for all-time highs in order to sell their stocks, but in my opinion, it is not the time to mess around, and I wouldn't be unhedged in this type of environment, especially, if the VIX drops too low, then I might want to hedge my portfolio with the VIX. I might, if I don't want to sell my stocks, buy protective puts, sell covered calls, use strategies like this to at least hedge 10% of my portfolio at least. And lastly, in terms of what the Fed is going to do next, they've never cut by 50 basis points in an aggressive rate hiking cycle and then not cut again the following month. So a lot of people are thinking that the Fed is going to pause in November, but they've never cut by 50 basis points and then pause. They've always continued to cut, sometimes by another 50, sometimes by only 25. I personally think that if they do cut, it will be a lesser than 50 basis point rate cut. Obviously, if unemployment's out of control and inflation's out of control, that's a different story. But yeah, this is a tricky time, guys. Now, October is the worst month during presidential elections. So take that into account, do what you will with that information. But October is rarely green during presidential election years, right? I told you August was 100% green. September was about 50-50. October is the worst month. November and December are usually really good months during presidential election years. So do with that information what you will, hedge how you like. Obviously, if you want to join us in the academy and see how I'm hedging, then feel free to click the link in the description, and I'll see you guys there. Otherwise, wait until a longer update. Sorry this is so short, but I'm traveling today. So wait until a longer update, and I will get you guys squared away. Anyway, stay safe out there, traders. Peace.